Welcome to Spidel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're discussing RMD requirements for inherited Roth IRA accounts. Spidel's Federal Tax Letter is a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that will impact your clients, from healthcare to trusts, and from energy tax credits to virtual currencies. You can see subscription information and download a sample issue at spidel.com under Publications. Do designated beneficiaries of inherited Roth IRAs and other Roth retirement accounts have an RMD requirement during their 10-year distribution period? The answer is no, they do not. Let's briefly discuss beneficiary classifications and their distribution rules to understand why designated beneficiaries of Roth IRAs do not have an RMD requirement during their 10-year distribution period. Taxpayers who inherit an IRA or other type of retirement account from account owners who die after December 31st, 2019, are placed in one of three separate beneficiary classifications: eligible designated beneficiaries, and non-designated beneficiaries. There are only 5 types of eligible designated beneficiaries. They are surviving spouses, minor children of the decedent, chronically ill beneficiaries, disabled beneficiaries, and beneficiaries who are not more than 10 years younger than the decedent. Eligible designated beneficiaries take RMDs based on their own life expectancy. Designated beneficiaries are generally individuals who are not one of the 5 types of eligible designated beneficiaries, as well as see-through trusts. Designated beneficiaries who inherit retirement accounts are required to distribute the entirety of the inherited account by the end of the year containing the 10-year anniversary of the decedent's date of death. If the deceased IRA owner had reached their RMD age by the date of their death, then the designated beneficiary also is required to take RMDs during the 10-year distribution period based on the decedent's age. The reason that RMDs are taken based on the decedent's age is because distributions need to be taken by the designated beneficiary at least as rapidly as they were taken by the decedent, which means you have to use the decedent's age when calculating RMDs. In the case of Roth IRAs, because original IRA account owners never have an RMD requirement for Roth IRAs they own, there is no RMD age. Therefore, no matter how old a Roth IRA account holder is when they die, they never reach their RMD age. This means that designated beneficiaries of inherited Roth IRAs do not have an RMD requirement during their 10-year distribution period. Non-designated beneficiaries are a catch-all category and are defined as any beneficiary that is not classified as either an eligible designated beneficiary or a designated beneficiary. Non-designated beneficiaries are typically entities such as charitable organizations and many but not all trusts. Non-designated beneficiaries are required to distribute the entirety of their inherited retirement account by the end of the year containing the 5th anniversary of the decedent's date of death. Non-designated beneficiaries do not have an RMD requirement during the 5-year period. Attend Spidel's Federal Tax Update webinar and get updated on everything that happened during the year to be ready for filing season. See a list of topics covered and get registered at spidel.com under webinars. That's all for this week. Join us next time for another episode of Spidel's Federal Tax Minute.